So we ended last lecture talking about essentially how globalization exists, but what really exists is this regionalization. North America trades with North America, Europe trades with Europe, and that's really the takeaway here. The world's not as flat as we like to make it, although it definitely is getting flatter. Now, shifting gears to the economic systems that different countries use. Real quick, I want you guys to know there's three basic economic systems. There's a market economy, there's a command economy, and then there's a mixed economy. The market economy is the American economy. It's an economy where suppliers and sellers set the prices for the goods that they want to sell, and they let the market decide what they should charge, essentially. But it's up to them. If they want to charge $10,000 for a watch, then they can. A command economy is the exact opposite. It's a government, and there's very few of these command economies where prices are set by government. Corporations and individuals don't have the right to set prices for the goods and services that they sell. So very, very few of those. North Korea might be one. Some might say Cuba might be another one. China has a little bit of that, although they've lost that strain of their command economy. It's not the 1970s anymore in China. And then most countries in the world have a mixed economy where you have some products that you let go on the market for whatever prices are, but then you have other products where government sets the prices. So a mixed economy might be something that you might see more of in Mexico, where government sets the prices of things more, or even in Venezuela, where government's setting the prices, starting to set the prices of food and other things like that. So those economic systems are that you need to know. So moving along to economic performance by region, we're kind of going to split in this class. We're going to split the world into a few different regions: North America, South America, Europe, Asia, and a few other places. So let's check out those. First of all, we're going to talk about the one we're most familiar with, North America. North America is by far the most lucrative market in the world, and the number one market within North America is the United States. And multinational corporations, whether they're American or not, find the U.S. a lucrative expansion market. If you're a big multinational corporation and you are not in the United States, then you're missing out and you badly want to be here. Every company in the world wants to do business with the United States and to be here because it's the most lucrative market. Okay? That's one of the things that we kind of have to think about is how foreign multinationals think about the U.S. They want to get their foot into this market. And although you might hear that we don't welcome outside firms or that we tax firms way too much, those are all policy decisions that I'll let you guys decide on. The point of the matter is we make it pretty easy for people to come into this country from far away as outsiders and to own land and to own businesses. So the United States makes things very easy for outside investors. So a quick question, who is our largest trading partner? Who's the USA's largest trading partner? A lot of people say China, but if you remember from our table earlier, it's actually someone in our own region. It's Canada. Canada is actually our largest trading partner. And a lot of that has to do with how close they are to us, but it also has to do with the legal and business environment being so similar. When you have a legal and business environment that are so similar across countries, it makes trade that much easier. So there's a lot of foreign-owned Canadian companies that are in the United States and vice versa. So there's a lot of U.S.-owned companies that are in Canada. And then Mexico has its own strong economy. A lot of people, when they think of Mexico, they think of things like drug cartels or danger or the beach. But Mexico has by far the strongest economy in Latin America. And they have a very strong maquiladora industry, which means basically, they make things. They have industries that make all the things that we used to make in this country, and they've gotten really good at it. They tend to be low skill level, kind of a production oriented manufacturing type of industries. But they're starting to compete with Asia from a technology standpoint. Mexico is, and it won't be out of the realm of possibility in 10 to 20 years that our iPhones or whatever kind of technology that we have will be made in Mexico. So Mexico is a very strong economy. Moving on to South America, I'm not going to have time to get into a lot of the different countries in South America. A lot of them are in a lot of debt right now, and their economies are, for the most part, are hurting because their currencies have been devalued. There's some South American countries that are very close to the United States, particularly Chile. And then there are other countries that sort of have moved away from us. So countries like Venezuela. But what you're seeing, the trend is that more and more South American countries are inviting the U.S. to do business with, especially U.S. corporations, and especially as it comes to energy and natural resources. A lot of the South American companies have kind of gotten all the resources they can get out of these countries, and they need U.S. companies to come down there and help them get even more out. The European Union is a very interesting region of countries because you have basically so many different types. You've got the old world and new world Europe. You've got the rich countries in the north and the poor countries in the south, and it makes for some really interesting linkages and difficulties for the European Union, as we're seeing with Brexit right now. The United Kingdom wanted to leave the European Union, and they voted and passed by a very small amount that they would walk out of the European Union, but they found that it hasn't been that easy because that's a huge part of their trade, and so they don't have. United Kingdom doesn't have the negotiating power that they used to have to negotiate with all of Europe. So even though the European Union is not strong and is set up with a lot of challenges, to leave the European Union really sets your country behind, as United Kingdom, England, and Scotland are kind of finding out there in Wales. Central and Eastern Europe, we're going to put Russia into this category. Basically, what we see are countries that are recovering from an extreme form of socialism called communism, basically where there was no economic freedoms, no political freedoms until basically the 90s. And it's led to some really interesting growing economies, but it's also led to a lot of inflation, a lot of crime, and a lot of political uncertainty, as most of the wealth in these former Soviet Union countries, especially Russia, has gone to just a handful of people that we call oligarchs, that have all of the power and all the money and have created kind of a two-class system in these Central and Eastern European countries. Asia, of course, we're going to talk about Asia in this class. We're going to talk a lot about Japan, and we're going to talk a lot about China in this class because they're the number 2 and 3 economies in the world. Japan has had incredible success in the 70s and 80s, but the way that they built their businesses were basically these kind of vertical integrated businesses. So when we think vertical, we think of up and down, and within those vertically integrated businesses would often be banks. So you would have banks own other types of companies. And here's the problem. This is illegal in the United States. If you're a bank, you can't own other types of companies other than banks, because what ends up happening is that these other companies come to you. They're owned by all the same corporation or conglomerate, and they want a loan. And how can you tell your own business partners no? So banks overextended themselves in Japan and gave out tons of loans to anybody that wanted one within those vertically integrated families of businesses. They were all part of the same business. And what happened was, because money was free, anybody could get it, and there's a really small amount of land in Japan, we had this huge run-up in a real estate bubble that was causing all this kind of fake money. But people didn't realize it at the time in Japan. Does it sound familiar? Yes, it is similar to what happened in 2008 here in the United States. But in Japan, it was much, much worse. And I want to show you guys this chart here. If you'll look, what you see is that basically this is a chart of the stock exchange in Japan. And starting in the 70s, it's called the Nikkei. And what you see is Japanese economy boomed in the 70s and 80s, just went up so much. Except look how much it went down, and look how much it hasn't gone up. So basically, prices, if you own stock in 1988, your stock is worth the same as it is now in 2018. So, you're looking at 30 years of no gain in the stock market. Imagine in the United States if we had 30 years of a stagnant stock market. We would have already had a couple of revolutions and started over with our economies and constitutions. It's just unimaginable. But that's kind of what Japan's been dealing with. So it's been a tough go for Japan. They've done a pretty good job dealing with it. And one of the reasons that they haven't been able to grow their economy after that big recession is because of the way they treat their employees. They don't believe in firing people in this country. In Japan, in the United States, we fire people. If we go into bad times, if a corporation starts to lose money, boom, we fire a lot of people. That's not how it is in Japan. China, probably the country we're going to talk about the most in this class. They've had incredible growth in the 80s and 90s. It started to slow down just a little bit. But companies really, really want to be there. It's so attractive to foreign investors, even though there's communism, and even though it's not clear how you can do business in China, it's just so much money over there, so many people, even though there's so much pirating and there's a copyright infringements, and it's very complicated. People still want to be in China. We'll talk about China in class. A few other countries I want to bring up. I want you guys to know the four tigers. They're not nearly as strong as China or Japan, but South Korea has shown some dominance in certain markets, especially technology and cars. They've got Samsung, and they got Kia and Hyundai. Hong Kong, now part of China, but we kind of, in this class, we'll kind of think of it as a little bit separate because it does have more freedom and a lot more English speaking and relatively new part of the country. The other two of the four tigers are Singapore and Taiwan. Singapore is an incredibly small country as far as the land mass. It's almost about as big as Baton Rouge, but it has millions of people and is an incredible economy for its size. And then Taiwan is an island off of China that you can't really talk about in China because the Chinese view it as their property. Although Taiwanese are free, they elect their own leaders. They don't answer to China. So whether you respect Taiwan as its own country or not says a lot about your relations with China, because China hates anyone that recognizes Taiwan's sovereignty. They see Taiwan as a part of themselves. So it's a very complicated issue there. The baby tigers are important for us to know just because of their population and inexpensive labor. Now that these tariff wars have kind of started in China, what you're seeing is a lot of the manufacturing that can be quickly moved is moved to this area. So China's losing a lot of jobs to these countries here, Thailand, Malaysia, and Indonesia, where you have inexpensive labor, large population, and it's very attractive to outsiders. A few more regions that we want to know about. India is going to be the most populous country in the world in just a few years. Incredibly attractive to people, but it's a very poor country, even lower per capita GDP than China. And it's attractive to U.S. and British investors because many people speak English, but it's also unattractive because when you think about China, you have one language and one culture. When you talk about India, you have 10 and 20 and 50 different cultures with 10 and 20 and 50 different languages that people speak. And so it's really, really difficult to conceptualize India as a single country. And that makes it very hard to do business because the laws change, the elected leaders change, even how you communicate with employees changes from region to region. So it's a very difficult but still attractive area. The Middle East and Central Asia, it's highly unstable, and it would be unlikely that most corporations would want to do business there, except for their incredibly large oil reserves, which make people have to do business there. It makes energy companies have to be there, and then all the companies that support energy companies are there. So It's really, and people see value in those large oil reserves, so they try to influence policy. So there's a lot of outsiders sticking their finger into the business of the Middle East, which makes it also even more unstable than it already is. So it's a very interesting region to study. And then finally, we have Africa. Africa started to come in the news lately. It's of course it's a continent with many different countries, but kind of lump them together because it's a very poor and underdeveloped a continent and needs a lot of help from outside because it does have a ton of natural resources that haven't been used yet. And interestingly, China is taking the lead on this to move into Africa and to start to try to get some of those natural resources. The Chinese have this initiative to build a single road that goes all the way from China all the way to Africa, the transport road. It's a huge undertaking, but they want to be in Africa to develop it. And some people say colonize it. We'll talk about that later on.